Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer is so simple, and it's so poetic for why I like Bitcoin long term. Now, you guys know, shorter term, I still think we're going lower. That hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on the longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, think about this. Think about how investors are selling banks and actually buying Bitcoin.
In this video, renowned technical analyst and master trader Gareth Soloway shared his insights on the current state of the markets. With the global interest rates on the rise, numerous countries are experiencing a significant tightening of financial conditions. Recent data showed a surge in U.S. inflation and an increase in consumer spending, which has led to the dollar reaching 7-week highs. In a statement from March 2023, Soloway noted that a stronger U.S. dollar would compound pressures on some emerging market and low-income countries that are already at a high risk of debt distress. He also pointed out that rising interest rates could help to strengthen the U.S. dollar, but that this would further tighten financial conditions for many countries. Soloway holds a different view and predicts that Bitcoin may fall to $9,000 per coin and will not perform as well as other assets. Despite Bitcoin's notable gain of over 40% this year, and a 38% increase in the last 30 days, Soloway highlights that Bitcoin is still down by more than 65% from its all-time high. Prior to moving towards the video, make sure you subscribe to our channel and hit the bell icon so you never miss any upload of ours.
The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? Riddle me this. The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. All right, that's what people run to. So it has nothing to do in a normal scenario. If the banking mess in Europe wasn't going on, if the banking mess in the US wasn't going on, you know what they would do? They would be probably selling the dollar on the PPI data. But because of this, because of the issues here, people are running to the safety of the dollar, and that also is not a good thing for the U.S. markets. Markets don't like a higher dollar. You know what else doesn't like a higher dollar? Bitcoin. Bitcoin, again, pulling off yesterday's high, but look at this chart. This is why I use charts in every day. I had a long and verified investing crypto in Bitcoin. You know where we unloaded it? We unloaded it right into this trend line here. Look at how this trend line has caused price to pull back every time. And so again, the thought process here is, well, don't try to reinvent the wheel. Just follow the freaking charts. And that's all I did. So yesterday we unloaded just above 26,000 our Bitcoin position, and it's pulled back since then. Now, again, part of that was also a 3-bar surge. We know that in trading, when you have 3 mega green candles to the upside or 3 mega green candles to the downside, in general, you get a bounce or a pullback. In this case, when it's a sharp move up, you get a pullback to the downside.
Soloway, a prominent market strategist, has expressed his confidence that gold will outperform most major assets in the current year. In an interview with Lynn, Soloway reiterated his position and stated that he firmly believes that gold will be the best performer. According to Soloway, the Federal Reserve's decision to maintain interest rates, coupled with their reluctance to cut them until there is a severe economic downturn, bodes well for gold's performance. While the Fed may tighten rates a little more, Soloway's overall outlook remains bullish on gold. His prediction adds to the ongoing debate on the future of the financial markets and which assets will perform the best amidst the ongoing economic uncertainty.
Gold is ripping higher today. Beautiful move to the upside. And look at this move here. Guess where we're headed, guys? All right. Look at this chart. You have your up move for 2 years from 2018 to 2020. You have sideways consolidation. I still remember when we were trading down here, everyone was like, oh, Gareth's insane. Gold stinks, da-da-da-da-da. Yet it was still the best performing asset between the S&P 500 as well as Bitcoin. And then look at the run it's gone on here. This was my prediction, is that when the Fed finally gets to a point where they have to pause because things get so messy in the economy, you know what's going to happen? We're going to see gold rip. Now, gold is going to have resistance coming up at this upper trend line around $1,955. That is okay. That's normal. It's going to have a pause, a pullback, and then it's going to bust through and break out. And then you know where it's going to go? It's going to go to your double top high right here. All right. By the way, I have to just point this out. This morning, BlackRock's Larry Fink, who is, by the way, one of the most, basically the most respected investors and traders in the world, said exactly what I've been saying for the last year, that inflation, and this is one of the cases for gold, is going to stay elevated for many years to come. He said 3.5%. I've been saying around 3%. I think that's exactly dead on. I'm sticking to that. And you know what? The fact that the Fed is going to have to probably pause or stop hiking, maybe they'll hike 25 basis points next week to keep face. You know, again, the Fed seems, intent, just like when they said transitory and it wasn't, they had to just overreact the other way. But the bottom line is that essentially you're going to have inflation staying elevated, which is then going to be the bull case of long-term for Bitcoin as well as gold. And you know what's crazy? So you're going to have gold resistance at double top, triple top, essentially at 2070. But I want to show you this chart, guys. This is the chart that blew my mind. So essentially, remember this, 2018 to 2020 up, and then sideways to lower for the last 2 to 3 years.
Soloway believes that inflation will be a significant concern in the coming years due to several factors, including the massive monetary and fiscal stimulus provided by governments and central banks worldwide, supply chain disruptions, and rising commodity prices. He also suggests that the Federal Reserve's policies could lead to an inflationary environment by keeping interest rates low and allowing inflation to run hot. According to Soloway, a prominent market strategist, inflation is expected to remain high this year. He believes that inflation will stay above 3%, possibly reaching as high as 5%. Soloway attributes this to the stickiness of wage inflation, which will lead businesses to raise prices to cover the costs of higher wages. However, Soloway also predicts that the rate of inflation will trend downwards, albeit at a slow pace. His insight highlights the complexities of the current economic landscape and how businesses and investors alike are grappling with the challenges posed by inflation.
And here we are today with the banking sector a mess. Europe is now a mess. We're seeing, again, the banks in Europe getting absolutely annihilated today. And again, it's kind of common sense. To me, it's common sense. Now, in all fairness, is it the Fed's fault that we're in this predicament? Partially, yes. And the reason I say partially yes is because they said transitory, right? We remember that word, transitory. Inflation is going to be transitory. There's no need to really jump on and start raising rates yet because it's going to be transitory inflation. They were wrong. They had to play catch up, which means they had to jack rates up in a short amount of time, insane amounts. And remember, we're not just talking about going from 0.25% to 5%-ish. We're talking about the rate of change, how quickly it happened, and we're talking about how many hundreds of percentage points that was an increase from 0.25 to where we currently are. Now, in all fairness, banks like Silicon Valley, they deserve a lot of blame too. These guys are probably getting paid millions of dollars. In fact, I saw that the CEO of Silicon Valley Bank cashed out like multiple millions, like $3 million just before this collapse in stock options or whatever he was doing. And ultimately, these guys are getting paid this type of money. You better be damn sure you understand the risks when you see the Fed raising rates.
In conclusion, Soloway's analysis highlights the challenges that investors and businesses face in navigating the current economic landscape, particularly in relation to inflation and currency fluctuations. While the Federal Reserve's efforts to curb inflation through interest rate hikes may have some impact, the stickiness of wage inflation and other factors may continue to contribute to inflationary pressures. Lastly, his cautious outlook on Bitcoin's future performance is a reminder that even seemingly robust assets can experience significant volatility in the market. What impact do Gareth Soloway's insights and forecasts have on the decisions of investors and traders, and how do they factor in his expertise when navigating the markets? Share your thoughts in the comment section below. If you found this video informative, please give this video a thumbs up and subscribe to our channel.